Even in the dog days of summer, he's focused and fired up to help make you money. Now, Cramer rolls up his sleeves and goes back to his Wall Street roots. Because where better to find a bull market than the heart of the world's financial capital?
We need to talk about Beyond Meat, the maker of faux hamburgers with a red-hot stock that got hammered today. It was down 12%. It was on the news of a big secondary offering. Certainly wasn't because of the fundamentals, because they had much stronger earnings and definitely better sales. Think of it like this. The company CEO, Ethan Brown, is the Elon Musk of meat. He's a believer that there are healthier, better ways to consume protein. Why eat a cow when you can eat a plant that tastes just like a cow? Like Musk, Brown is a pioneer. Initially, he seems brash, a zealot. They're both very in your face about their views. Beyond Meat is indeed a cult stock, just like Tesla. However, there's one big difference. Elon Musk doesn't want to hear anything you have to say. He dismisses anyone who disagrees with him as a moron or a computer simulation. Some people don't suffer fools gladly. Musk doesn't suffer anyone gladly. Ethan Brown, he's the exact opposite. He wants to hear what you have to say. He wants to hear your objections so that he can be better informed and produce a superior product. I grabbed a burger with him a week ago at the Bowery Meat Company, along also with a Beyond Meat taco, a Beyond Meat lasagna, and a Beyond Meat sausage. All delicious, by the way. And he told me Beyond Meat is one gigantic work in progress. I think that's a great line. No arrogance there. And on last night's conference call, he told a great story. Ethan's trying to make the best-tasting meatless burger imaginable. He wants all the flavor of beef with none of the stigma of eating a dead cow. I think he's doing a terrific job. But there's a reason people say there's no arguing or accounting for taste. When I read the critics of Beyond Meat on Twitter in my column, they're mostly critics who seem to way outnumber the supporters. And many of them, why? Well, they just don't like the taste. Another cohort prefers their competition, the Impossible Burger. Still, others believe Nestle will steamroll everybody when they roll out their awesome burger later this year. Finally, those who say that plant-based alternatives are actually worse for you than red meat. Let's address these one by one. While taste is inherently subjective, Beyond Meat sales are quantifiable. Numbers are exploding. It's up 287% year over year. Holy cow. That tells me there are a lot of repeat eaters here. Maybe you don't like the taste, but somebody does? Next, I happen to love the Impossible Burger, but it's made with genetically modified ingredients. And that flies in the face of the natural and organic ethos that's fueling so much of the demand for this stuff. How about Nestle as a competitor? Aren't they gigantic? Didn't they just report a terrific quarter? Yes, but I've tried their meatless burger. I thought it was inedible. But again, taste is subjective. Still, I think this category is big enough for multiple competitors. Then there's the health issue. Let's talk about that. This one's real. These things have a lot of sodium, more sodium than I'd like. This is not the healthy hamburger alternative that so many people want, but it comes closer than anything else I've tried. Which brings me to the point that always gets lost in this conversation. There's a stock called Beyond Meat, and there's a product in your refrigerator called Beyond Meat. These two things are not the same. We can fight over the product. Hey, listen, I grilled one right down the block here. I don't know, smelled good. But the stock, it's traded at these lofty levels because half of the float, half of the shares available to the public has been sold short. There are so many people betting against it that it's pushed the stock up on its own right, at least until today when the shorts racked up a big win after the secondary was announced. As much as it hurt the stock, I think the secondary is actually a good thing. You know that? The action in Beyond Meat stock has been distorted by tight supply. You get more stock trading, you might wind up with a more realistic valuation. I say that because as much as I like the company and the product, Beyond Meat's currently valued at just under $12 billion, which is absurd for an unprofitable business that generated $67 million in sales last quarter. Oh, that's a lot of sales. I know it's growing like a weed, but the valuation is just way too rich for me. And again, I like the product very much. I'm just trying to point out that while Beyond Meat doesn't belong up here, it certainly belongs somewhere, which is something many of the critics struggle to accept. They felt the same way about Elon Musk and Tesla once. And if that's any example, the stock will never be low enough for some of the haters. But as for me, I think Beyond Meat's the real deal. The stock just needs to deflate a bit before, maybe even a lot, before I can count its buying it. But the burger, I'm ready for it now. Let's take some questions. Danny from New Jersey. Danny.
We are, Jim.
We're on.
Thank you for taking my question. My question today is about Yeti. I've been following your rules for earnings season very, very carefully, and I'm calling today to inquire about whether it would be better to buy a small position now prior to Thursday's earnings or keep my bat on the shoulder. What do you think?
Well, Dan, remember what happened. When the stock shot up to 20s, we said we didn't like it when it was in the mid-20s. We got back to 18, we really liked it. It's now doubled since when it was 18. After the last quarter, it was very soggy. There was some misinterpretation about insider selling. That's going to give you a better entry point. I think the same thing could happen again. But we stand behind Yeti, and we like it, and thank you for the question. Yes, ma'am.
Hi, I'm Sarah. I'm a college student from California. My question for you is, how would you compare Uber's recent IPO to Lyft's IPO, and do you think they were overvalued?
Okay, I was wrong about Lyft. I thought it was a good level soon after it came public, and that was a mistake, and I had to eat crow down about 15 points. Not my favorite. I think Uber's an ecosystem, not just a cab company. If it's a cab company, it's worth half of what it is. They're not my favorite stocks, but I think Uber is certainly better than Lyft, and thank you so much for the question. All right, with Beyond Meat, it's all about trying to find the right stock level. I think the company, though, is the real deal, and management is too, and Ethan Brown is terrific, even if the stock is hurting. Watch where Mad Money at. Stacey Cunningham joins me to talk about her journey at the New York Stock Exchange, from one-time intern to first female president. Then the Dow-DuPont breakup was years in the making, but how is one of the spin-offs faring now that the split is finally complete? I'm Ian Corteva. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.